Hello and welcome to the Friday Wrap Up brought to you by David Gockstein. I'm your host, Landy, and today is March 20th, 2026, and we are looking at Bitcoin to start here on the daily with no bands, no moving averages, just the price action and some areas of interest to the upside and downside. Now, Bitcoin has broken back into the tighter range and is still sitting right around the top side of that tighter range. Which is around 70,500 to 72.2 after the initial move down and bounce off of a major area down here from longer term timeframes, that being the weekly area, where there was also an area of interest from the prior weeklies coming in from 2024 before the halving when Bitcoin was moving up, or in this case, I believe this low area was formed after Bitcoin's halving after the all-time high, and it was in the downtrending structure and beginning to break back into the uptrend. It's right around that that $58,000 to $60,000 area from that structure. Not going to go take a look at it right now because it's more important to kind of focus on what's going on in the daily as it relates to the weekly here for Bitcoin. We had the breakout that I was looking for. I had mentioned initially above the highs here at 72.2. I was looking for 74 to 75. We got that and a little bit more. And if Bitcoin can complete another higher low, there would be the opportunity to run the highs anywhere above 72.2 again. So I had mentioned in videos prior that if we saw this move come down and start to close below $68,000 to $69,000, which is right around where it bounced, here at 68,772 thus far, at least in the lower term timeframes. We're still looking at Bitcoin sitting at the top side of the range with a chance to break out of this tighter consolidation range. So again, if we do see Bitcoin breaking back above 72.2, now we have to pay attention to the local structure. I would look for the highs if we see price pushing back to 72.2, and you can take the gap here between 72.2 to 74.1 as a major area of interest. And then of course, if we do see Bitcoin go for the liquidity in here, that would be 74 to basically 76K. Anywhere above 76K, we can look for the major weekly area at 78 to 80. That would be of course, the breakdown at 80, and 78 being a major area of interest on a weekly closing basis. So that would be the area that I'd be looking for. Of course, that would put price back above the 2024 highs at 73,835. But if we do see, moves below around $68,000, I would be eyeing this low again at 65.5 to the range low structure here at 65K. Of course, that being the first high from 2021. And all the way down to the low would be fair game at the close open swing at 62.5. And if that broke down, then I would be looking initially down to that 58 to 60K level. Now, pretty straightforward stuff. Maintain the higher low structure. Even if we did see like equal low structure, to be honest, if on closes below, and I do mean closes below, not necessarily swings down, but closes below $68,000 or even 69, I would give it a little bit of room. But closes below there do start looking like this low wants to get run around that 65.5 to the 65K area. Can it still put in some equal low structure there? If it did, I would be wary of the high side structure here. A little less likely that we'd be looking for continuation up to 78 to 80 unless we saw a compression again, and then a breakout in earnest back above now the swing over the top side of this tighter consolidation structure. If we throw on the bands, it's all set up overhead for a rejection, even if it did start to break out towards 78 to 80 with the 100 period exponential there. And then, of course, the 80,500 low that was put in that we, of course, broke down from, and then saw Bitcoin, race down to 60K here on spot. Just above there's the 800 EMA on the daily. And then if it did work its way above there by chance, which I think there would be time for me to do a video before then. I don't believe it's going to be happening over the weekend, but you never know. But if it did happen to reclaim the 80K region, it's mid to low 80s, right? 83 to 86, somewhere around the 200 period exponential would be fair game, right? And that would also be the bottom side of the closes in that tighter structure up there that I'm going to show you again in the weekly. Now, one of the reasons why I'd say be wary of the low here, if it does get run, if we start to see that break down, that last higher low, excuse me, I would be looking for expansion into support here around that 62.5 to 65. And then if we got a breakdown of that 62.5, that's where I'd be looking for continuation of that expansion even to 58 to 60. And then that ropes in potentially more to the mid 50s, 55 to 56 at some major weeklies down here, all the way down to the low 50K region, and potentially more if it started to really get aggressively move into the downside. I'd start to eye that 48 to 50 level and mid 40s below there. Now, it's a pretty bearish outlook in terms of the downside potential, but as it stands right now on the daily, the bulls still have a chance. A reclaim and a shot above the 55. So a reclaim of the 50 period simple, is better than nothing. And a shot above the 55 shows that, we could potentially see on any higher low structure a move back to the most recent highs to then try and go test for that 78 to 80. So it's not out of the cards as it stands right now. I'll watch, of course, price with all of you over the weekend. Let's go ahead and bring this up to the weekly time frame. So the weekly time frame going to be very interesting. I think that many are looking at traditional markets, oil, Dixie, obviously traditional markets in full on rollover mode to major weekly levels that I had been pointing out for some time now. We were talking about this all the way back at end of January, early February for traditional markets. Now, I'm not pictured on the screen right now as I adjust to my chair here, but we will take a look at those in just a moment. Let's go to the weekly here on Bitcoin. And just note, Bitcoin obviously swung below the 200 exponential. And if we did see a breakdown of the range lows, I'd be looking for the 200 period simple moving average to the lower second, somewhere around that 58 to 60. Now, if that were to break down, that's what starts to rope in the mid 50s to 48 to 52 and a half or so, 48 to 50 or so by the 377 and the lower third standard deviation. But if Bitcoin does solidify this as a low, what would that look like? Need to see closes on the weekly back above 74,100 and then daily continuation above the most recent high at 76 to start testing into 78. We have gotten a test of the lows over here, which is also a test of the high side structure over here. Tested it twice on the weeklies and then swung above it to test the actual low in earnest at that 74.4. Now, if we did see 74.1 break and then continuation above 76, that's where we can look at 78 to 80 at this weekly, and this swing anywhere above there. We can look for a move to the 100 period exponential and then, the low side structure, somewhere around 83 to 86K, at least initially. And then the potential for more swings to 89, which was the inflection point. That's that lower high over here. That's pretty much in line with this higher low on the weekly before Bitcoin came down to actually complete that higher term time frame, higher low on the monthly at 74.4 that was lost. But if we do see the bottom side drop out, that's where we're looking for another leg down. And that's where, I would start to entertain, that next leg down if we do see that from here anytime soon as being very highly likely going to take a little while to work its way out of it, but also more likely than not to become, the final low structure that starts being put in. I'm not totally sold on that. It's purely hypothetical at this moment, but when looking at momentum, when looking at RSI, that's what I would want to see and need to see in order to, I'd like to see a little bit further of a move up. So I'll be honest, I would like to see a low set here and at least a further test up into the 78 to 80s, or even if it's just a swipe. If we put in a local lower high, great. It's even closer if we do get another leg down to go and break that. But I'd want to see some distance put on in order to start creating some divergences on RSI. And we don't have that yet. Now, I explained this to David because there's a lot of, on the show during the week and the breakdown with him every Monday through Friday. Although today there was some other circumstances that came into play. He didn't actually have his show today, but typically every Monday to Friday, I'll be on there at 12:15 p.m. Eastern, 9:15 a.m. Pacific Standard Time. And I explained to him, when he asked me about, how a lot of people are saying this looks similar. This price structure looks similar back, to the same structure we had back in 22. And it's not there yet. If anything, this would be the low that I would like to see a little bit further price action move up on the weekly in order to make this the low that we see subsequent divergences come from. But it's not there yet in my book. So for many that are speculating that this could be, an area that turns into the macro low, I don't see it. I really don't. Can I be wrong about that? The way in which I've explained that I'd be wrong about that is on any closes back above $98,000, because that would be a structure change and I'd be looking for higher low, equal low structure as it relates to this structure. So in order for my mind to change, we would need to see a low set here without going lower or putting in a lower high. And then we would need to go break $98,000 on a close, which would put Bitcoin back above the 50-period moving average on the weekly, and then come back down for higher low, equal low structure as it relates to this low side structure. That's where things could potentially change, but that's not what I feel is going to be the most likely outcome from this structure. You can see the way the bands are lined up. You can see the overhead resistance on the daily. You could see it on the weekly. I don't think it's mature enough. And we need to see some bullish divergences start to come into play for Bitcoin. So I do think that it'll take a while. I still maintain that I'm looking end of Q3, early Q4 is likely the time frame in which we find, a major low that could potentially turn into a macro low. So I think that there is time to position and accumulate, and whether it be here or and lower, or here or lower. So. Yeah, not too much else to say on Bitcoin there. Not too much of a different look or take that I've had for quite some time now, especially since the breakdown. We've hit all the levels pretty methodically on the way down on the weeklies. The weeklies have been just absolutely beautiful. Bitcoin loves playing weekly levels. We came down to essentially play this level. And of course, if we are going to play this weekly higher low swing, as Bitcoin was working its way off the lows of this structure. And this is where we had the big spike down. We got the close lower, but the higher low swing that was telling us like, hey, if this can break the lower high at 65K, great. That's where, of course, we've found closing support on the weekly here is off of this high. We broke that high, put in a higher low structure, and then went on a run. That could be something that would be in play if we saw like 98 breakout. Or a lower high relative and then a higher low relative to this. But we're just not, we need to set the closing low first. We're not there yet. So my opinion is that we need to see lower. All right. Let's go ahead and take a look at commodities. I noted that, pay attention to, everybody's shocked by this. And I said very early on when the conflict started in the Middle East, that you need to pay attention to macro overhead resistance for oil, and that it would be regional in terms of pricing. That was my point behind the whole, everybody's like, oh my God, China's not going to export. They don't export oil that much, right? They are a net energy consumer. So that really makes sense for them not to export anything as they kind of turtle up and kind of ride this thing out. But and also what I was talking about in my posts shortly after the conflict broke out was that, we're going to, I emphasized the point that the United States is the world's #1 producer of oil. And we're just talking the United States all right, as a producer and exporter of oil and gas. In this case, liquefied natural gas. So when looking at the markets and seeing the fractured pricing across the Western Hemisphere versus the Eastern Hemisphere, this is not a surprise to see WTI staying significantly lower than Brent and Gulf oil. All right. So what am I watching? I'm watching, well, in this case, WTI, Brent, Oman, Dubai, and a few others. And this is where, I had said this before, we have the high in here into a macro zone of interest here from 2022. 115 to 130, 2021 into 2022 is the run up here. And then we had a macro high. There is a high that is higher than that. That is a macro structural area for WTI between 140 and 147. But this move, this aggressive move into resistance and then straight back down into the 76 region, up over the 200 moving averages, all major moving averages are still riding below there. Does tell me that even if this gets another shot to the upside into this 115 to 130 area, likely going to be short-lived. Now, on the weekly, we don't have a high, but I do think, back below on dailies, back below this 95 to 90 area, we have to pay attention to the mid to low 80s by the basis band. If we do see the mid to low 80s and the basis band, which is just a 20 simple moving average, dropped, look right to this low $75 to $76 a barrel. If that starts to fall apart, by the time this opens, 55 period, it is going to be around that area between 74 and 76. I'd be looking for, if this fails or goes lower, as it would likely bounce from there. But I'd be looking for this to make its way to lower highs and then work its way down to 68 to 72 or so. The top side of this macro support area that we did not see any closes below. We saw dailies and weeklies even swing down to $55 a barrel more than a few times late last year coming into this year. But we did not see closes on those higher term timeframes relative to the 57.22 cent per barrel. Now, that cannot be said of the Brent trade, which did run the highs, and the trades out of the Gulf states, which are riding really high. So we are seeing the network effects, and we will continue to see those even after we likely we'd get, money's going to move before the news starts figuring out what's going on. Maybe you can get some edge by looking at, transponders through the strait or something like that. But reality is that the money's going to move before we actually hear something. And I would just pay attention. If you see WTI swinging down and breaking below 90, pay attention to those mid to low 80s, and then anywhere under there around the $75 to $76 a barrel region. You're likely going to hear some positive news regarding energy, the Strait of Hormuz, and like all that kind of stuff. Maybe even deals being done. All right. I also think that if we continue to see it push up, not only will you hear negative news as it relates to what is happening, but I think that that would be the end of this expansive move, and then a consolidation, and we just find the floor. Or the third scenario is that we consolidate above 90. If we consolidate and normalize above 90, that gives oil a chance to reload. If we see aggressive spikes up, likely, even if it makes higher highs, going to get sold off pretty quickly. And if we do see a consolidation and a further compression up here, and then a move up, that's where we could see a sustained move. But as it stands right now, that's not what I'm looking at. And we're seeing this really extended structure for Brent over here. Obviously swinging the highs or near the high side structure here at around the $120 region at 119.50. Now, of course, this is CFDs. If you're looking at futures, it's going to look just slightly different. But, if we do see closes back above the upper second, I would say that this Brent move is probably nearing its end for the expansion as well. Doesn't mean that it can't keep walking up, but it's more likely going to get corrections sooner rather than later to, at minimum, some consolidations. Last higher low here for Brent is down in the 81 dollars per barrel. So just pay close attention to it. If you see WTI continue to hold strong above the 90 region, pay close attention to Dixie, as Dixie could continue this uptrending structure. If we see WTI start to break to the downside, pay attention to Dixie around the 98.50 level, as I would start to look for it to come more in line with around 98 bucks towards the lower first here and right into this cluster of moving averages. So pay close attention to that trade, because if Dixie continues to hang strong, well, let's go look at traditional markets. That's where we're going to see continued pressure to the downside and bounces being blunted in traditional markets. We have now entered and swung the weekly level for Dow. This is the primary target that I've been talking about on Dow for the weekly to the downside as the first primary target on a rollover. Been talking about this across various live streams, Spaces events, and these videos. We now have entered a bouncy area on the daily, but there is the potential for further downside should things worsen. And you got to pay close attention to 45,000 points here. It can swing under there to the upper 44.7, 44.8 region. But if we start to see, that continue to break down, I'd be looking 4,500 to 4,200. I'm sorry, 44.5 to 44.2 or so by the lower third. Could it go for 44K? Sure. Absolutely. Nothing saying that it can't when this type of a move is rolling. Last lower high in the daily is up here at 428. That needs to be broken. That is the criteria for a structure break on the daily, but it would have a long way to go. Long way to go to actually work its way out of here. So this is going to take some time, I would expect. If we see a really big snapback towards the 47,850 to 49K region up here, I'm sorry, 47,850 to 48 region up here, I would expect that to be rejected shortly thereafter. But that's when we can monitor to the low for higher low, equal low structure. But we would want to see a structure change from here, barring another lower high before I talk to you, which isn't going to happen because I'll talk to you again on Monday. But 47,428 is what you would need to see break on Monday and back above the 200 exponential and simple on the daily. Weekly looks like crap. This is a technical breakdown. Anywhere below the basis here, not looking good. Realistically, this is going to this in my opinion is going to make a lower high when it eventually does bounce, whether it's here or lower. It's going to make a lower high, and then we'll have to monitor this low or wherever it comes in, if it is lower, for wherever that lower high would come in as the trend break point. Same for NASDAQ. NASDAQ right in the weekly. This is a technical breakdown, but it did not close below the swing here at the 23,867 or 860 region. It's right in the thick of the weeklies. In some major areas of interest. Looking at the daily, though, same kind of thing. Last lower high to pay attention to, sorry about the mess of lines here, is going to be that 25,180, 25,2 region. Breakdown below the 200s here, not good. But we did essentially hit our target in the 23,7 to 8 region. And that is likely going to get significantly worse should things continue to the downside. The last lower high, actually, I take that back. It's 24,881 for a structure change on the daily. And then we can entertain maybe the weekly and the 200s holding up if it were to start to try to work its way out of here and change structure from here. But so far, this is an expansive move to the downside, just like Dow, but right into a major weekly of interest. You want to see it hold up or it's going to get worse and potentially turn into a Six Sigma. I mentioned that on NASDAQ and for the weekly here below 23, 7, look for 23.5. If that starts to break down, we've got a long way to go to hit the low side structures over here that really formed a messy structure, but around the 23K upper 22s in the 22,960 region. That would be the next area below the 55s here, and then eventually I think we work our way down to the mid 22s and maybe even the upper 21s if that were the case. But keep an eye on it. Major weekly level to pay attention to coming into the Monday session. 650 got a run of the low here, and I'm not sure why this is actually. So this actually was my mistake. 648, we got the swing down to 644, 645. Could it go for more at 640? Absolutely. If it starts to break down from there, looking for the next level. Don't want green there. I want this to be, we'll just call it, we'll put a white line. 630 to 635 would be the next bigger area before really getting into the 612 to 615 area over here, where price tried to hold up or did hold up after reclaiming these highs over here. So yeah, and realistically, I don't know why. Maybe this chart just got messed up when I was doing a bunch of stuff. I could potentially see as low as 600 points being pretty fair game if this gets rolling through this weekly downside structure and then the next two. If we start seeing it trade towards the 620 region, 615 region, 600 points on the board. For the dailies, yeah, this did get messed up. Something got goofed up here. Last daily lower high 672 needs to be broken if this weekly is going to hold up. Just pay attention to failures above the 658 to 660 level. We hit methodically. We hit the areas that I was looking for, and I mentioned, if you see 675 break down, it's all downside from there. This is expansion on the daily. This has got legs to continue expansion down to the downside on the daily as well. So just pay very close attention to it, where we find support and where the next daily lows come in for traditional markets here in the U.S. I don't really have too much else to say, but if it does continue down in this type of an expansive fashion, VIX above 30 again, I would be looking for this to possibly break out back towards the 35 to 36 region, and then start really marching on towards a true Six Sigma, that could get pretty bad. And we're looking at some really good opportunities to the downside for some cheaper prices. And that's when I like to go shopping. So 30 and above, and but it's relative to the trend, right? So we're still likely going to see trend continue to the downside. It's going to take some time to work this out back to the upside, get some trend breaks and some higher low structure. So first of all, we need to see a low set. We're at a major weekly level for all three of the major indexes. So pay attention to this weekly level. If it's lost, we're looking for significant downside to the next major levels. And then if it does hold up, we got to look for those daily trend breaks to see if it's got a chance or if it just continues trending lower. And that's where, again, I'm going to be focused on taking a look at U.S. oil, and of course Brent, and then we can start. You can rope in, futures, and we can look at something like TCL1, which is going to be traded in yen. This actually finished up and actually hit a high of like 560 per kiloliter, and then that works out to like $88 US per barrel, which is interesting. So I would keep an eye on it, but realistically, kind of see where the Dubai crude settles out, Oman, and that kind of stuff. And you can take a look at that kind of as regional stuff. But realistically, for the U.S. here, pay attention to the 90 to 95 level if it continues to hold up for WTI as it relates to the dollar. And then pay close attention to where money is moving, if it's moving in or out of bonds as it relates to the dollar as well. And that's going to be kind of how you can gauge kind of where things are going globally. And you can keep an eye on foreign bond markets as well to kind of see what's happening, to get some more edge on kind of where things are going. But yeah, enjoy monitoring the situation over the weekend. I know I will be paying very close attention. And then, yeah, I'll be back here on Monday with my thoughts on price action. And of course, this is Bitcoin centric, and I do care more about where Bitcoin's going because that is what I like to trade and what I like to accumulate. So 68 to 69, pay attention. Above 65, it's fine still, but if we start seeing that area tested, very likely going to go for the liquidity to the downside. But top side, 70,500 to 72.2. If that area holds up and price continues to stick around this area without falling and closing below 68, then we could potentially see the highs back in play, 74 to 76, above 72.2. And then anywhere above there, we're looking 78 to 80. That's all I got for you today. I hope you have a wonderful weekend. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.